Title: Boom. Bank of England hits the borrower pain button, sends interest rates soaring. TLDR. Bank of England, BOE, does a surprise twist and launches interest rates higher than anticipated, a 15-year high of 5%. Buckle up, borrowers, 'cause this hike's got some serious kick. The decision aims to combat high inflation, but 1.4 million households refinancing their mortgages this year might feel the pinch. Is this surprise move a fiscal hero or economic villain? On a grey London morning, something stirred at the Bank of England. Without warning, the BOE's Monetary Policy Committee fired a half percentage point into the interest rate, rocketing it to a 15-year high of 5%. Bigger than most economists predicted, it was like Sherlock Holmes suddenly pulling a Marvel superhero move. The plot thickens as Wednesday's figures revealed that UK inflation was sticking like a bubblegum under a school desk at 8.7%. Everyone expected a polite decline to 8.4%. But no, the number said, "You can't tame me," and stayed put, revving the engine of economic concern. In this high-stakes poker game of international finance, central banks from Uncle Sam's backyard to European corridors have been boosting interest rates to cool down the inflation party. From pandemic rebounds to the recent disruptions caused by Russia's invasion of Ukraine, inflation got stoked and refused to chill. Amidst this whirlwind of financial power plays, the BOE's move is likely to add a fresh weight on borrowers' shoulders, especially those 1.4 million UK households planning to refinance their mortgages this year. It's like planning a picnic and suddenly it's raining interest rates. You'd think they'd carry an umbrella, but who expected this storm? With Turkey, Switzerland, and Norway also dipping their toes in the central bank action, it's clear there's a global sentiment of inflation. You've had your fun, now it's time to leave. Meanwhile, back in Britain, the stubborn inflation rates are causing a cost of living crisis and hardening the mortgage crunch for those 7 million households who have a mortgage. A statement from the GMB trade union highlighted the steep real-term cuts in living standards and warned about significant economic damage as people struggle to pay their bills. A bleak picture, no doubt. But here's a thought: high interest rates do curb inflation by making borrowing pricier, hence potentially less spending and lower pressure on prices. It's a tough-love economic strategy that might work out in the long run. Yet, can the British economy withstand the strain without toppling into recession? Disclaimer: this article does not provide financial advice or recommendations. It's purely for informational purposes. So, what do you think? Is the BOE's surprise move a necessary bitter pill for economic stability or a reckless gamble with people's lives? And how does this massive decision change your perspective on managing your finances in a rapidly evolving economic landscape?